Alrighty, good morning, everyone, and happy Wednesday. This is Taylor kicking off the pre-market prep, the CPI special. We got the CPI, and the market did not die, at least not yet. So, quick look here at the futures, folks. You got the S&Ps up 0.7%. You got your NQ up about 0.8%. The small caps are, ooh baby, small caps up 1.3, and the Dow, all 30 of the Dow stocks are up a blistering, scorching 0.4%. So if you got any longs on your book, the good news here, at least so far, market not falling apart. But from here, guys, the question remains: can we finally get out of the range? This range has been going here since April. Got the top of the range, you got the bottom of the range, and now even with a little bit of a pop here this morning, for me, it kind of remains a little bit of a tough read here as far as trying to gauge which way does that daily squeeze want to fire. Reason being is the daily chart is neutral. The 4-hour, 2-hour, 1-hour, 30-minute are neutral. So for now, the only ammunition the bulls have inside of your daily squeeze is a 15-minute and a 5-minute buy signal, which, not a bad start. But more often than not, if I'm trying to see that daily squeeze fire to the upside, we are looking for as many lower time frame buy signals as possible. So a little bit of a pop here, but things remain a little neutral. And then for the NQ, as far as lower time frames go, not bad, right? No warning signs, no sell signals, but nothing really knocking our socks off here just yet. And of course, you got the NQ right up here at resistance. So for today, for Thursday and Friday, that'll be the focus. We got the compression part of the equation with our daily squeezes. Now what I'm looking for here on lower time frames is the bulls to start showing up in a major fashion. So imagine if today at the close, your 4-hour, 2-hour, 1-hour, 30, 15-minute, 5-minute, if they're all printing that buy signal, there's a really strong chance that daily squeeze wants to fire long. So we'll continue to keep an eye on that. But as far as open trades here and just, a couple of setups that I think look pretty solid, I gave y'all Amazon over the weekend, and this continues to be my number one pick here. So we did pick up some calls on Monday, and we bought the 102 calls, couple strikes in the money for next Friday's expiration. And all I'm looking for here is a push towards that 110. And it looks like we're going to open up around 108 and change. But it's your classic setup. Daily bull squeeze. Bull squeeze meaning you're printing a daily buy signal right near your daily 21, which for me is the buy zone. And then you had the nested squeeze dynamic. Your 1-hour chart had a bull squeeze. 30-minute chart had a bull squeeze. The 15-minute had a bull squeeze. Now, the kicker, of course, is, Amazon can look, all kinds of pretty here. But if the S&Ps fall apart and the QQQ falls apart, Amazon probably falls apart as well. So a big part of the equation here as far as trying to see Amazon up towards that 110 would be getting that breakout here in the NQ. Imagine instead of today, tomorrow, into Friday, we do the little poke above resistance, and then we kind of fall apart and pull back from there. It's tough to see Amazon trading higher. As goes the market, goes the stocks. But I continue to like that for a push towards that 110. That's my best pick at the moment. And then a couple more names here. Take a quick look at the Google. Now, here's the thing. It's kind of like the QQQ. The daily squeeze sets the stage for a push higher or a push lower. Right? Daily squeeze just sets the stage for a directional move. Where's all the clues right now in terms of which way does it want to fire? Weekly chart neutral, daily chart neutral, 4 hour, 1 hour, 30-minute, 15-minute neutral. Now, the only ammunition here inside that daily squeeze is your 2 hour buy signal. And this just means for me that I'm going to miss a lot of moves. Google might pump today, might break that 110 level. I might not touch any of it. I'm going to miss the moves where things aren't printing that signal. As opposed to an Amazon, where for me that's a no-brainer. Like, yeah, I'm going to take that trade, that nested squeeze at that 21, pretty much every time it comes across the radar here. So Google is... I need a bit more clarity. If today or tomorrow or Friday, this all sets up a bit more like Amazon, daily chart flips bullish, lower time frames flip bullish, then I think you're looking for a position here. So we'll keep an eye on Google. And then Tesla here. Now, for what it's worth, I think you got much cleaner names in the market than Tesla. So trade the clean setups, not your favorite stock. But for the old T here, if they can get anything going here to the upside, and it's not a huge move, but I think if they can get anything going to the upside, at a minimum, we should head back towards that weekly 21 EMA. So we'll call it 183. So if Tesla's going to get back to 183, 185, here's a kicker. And they were kind of flirting with the idea the other day. But if you're going to carve out a path here for a push back towards that 185-ish, it is a two-step process. Step one, we have to close above that daily 21 EMA, which they did on Monday. Step two, you got to hold price action above that 21, which they failed to do yesterday. So they're kind of back to square one. But get above the 21, stay above that 21, and then from there, the path into that 185 should unfold with lower time frame buy signals. North of the 21, if you're 1 hour, 30-minute, 15-minute, 5-minute, if they can all pump out that big three buy signal, then you play for a path back towards that 180, 185. So not the prettiest, but we will keep an eye on that. And then two more picks for you guys here. AMD trying to shape up here. Right. So the ebbs and the flows. I want y'all to look down here at the momentum histogram. All right, so look down here. And when it comes to swing trading, a big part of playing the ebbs and flows is trying to be in line with momentum. So you'll notice when momentum crosses below that zero line, things get a little bit sloppy. When momentum crosses back above that zero line and essentially gives the bulls a fresh tank of gas, you get a nice leg to the upside. Momentum breaks short. Yeah, we're a little bit sloppy. Fresh tank of gas. Next leg to the upside. Momentum again breaks short. AMD gets tossed around a little bit. But after earnings here with that big hook back towards 95, down here on the histogram, we're not there quite yet, but a little bit more strength should fill up the gas tank here as far as that daily momentum. And if they can get that accomplished, I think you're looking to buy a dip and then trying to play for the continuation of what's been, I'm not going to call it a beautiful uptrend, but you can kind of see the ebbs and the flows. There's your low. There's your higher high. There's your higher low. There's your higher high. There's your higher low. You put in another higher high. You pull back, you put in a higher low. So by definition, that's an uptrend. So from here, if they can hook momentum back above zero, eventually you look for a path back towards that 105 level. Keep that series of higher highs and higher lows going. But AMD, Tesla, Google, nothing I would rush into just yet. I continue to think Amazon is the prettiest of the bunch. So we'll see what's up today, guys. But one more pick for you here. And this is an honorable mention. TJ Maxx. My wife must be shopping a lot. So if you're a fan of the nested squeeze, check this puppy out. Daily bull squeeze. 4-hour bull squeeze. Inside of the 4-hour, you have a bullish 2-hour chart. Inside of the 2-hour, you're coiled up here in an hourly bull squeeze. Inside of the hourly bull squeeze, you're coiled up in a 30-minute bull squeeze. Inside of the 30-minute, you get a 15-minute bull squeeze. And inside of the 15, you guessed it, you got a 5-minute bull squeeze. So a little bit along the same lines of Amazon, you find those nested squeezes, and they all point in the same direction, meaning they all print that buy signal. From there, you look for that domino effect. If the 5-minute squeeze fires long, that could go on to trigger the 15. 15 could go on to trigger the 30. 30-minute could go on to trigger the hourly. The hourly could trigger the 4-hour. And then from there, could go on to trigger your daily squeeze. Now, admittedly, not a name that I watch too much. I like my Googles, my Amazons, my Nvidias, my Apples, my Teslas. But the old TJ Maxx here, one of the prettier names on the scan results. So there's a few charts for y'all, and then one more. Something to keep an eye on here. HYG, the junk bonds. So a big piece of the puzzle. If you're trying to see strength in the S&Ps, you're trying to see that next breakout in the QQQ, ideally HYG is going to lead the way. So go and study the chart of HYG over the last 1 or 2 years, and you'll notice usually if HYG is pushing, S&Ps, QQQ, they're pushing as well. HYG falls apart, you tend to get the same thing from the market. So this might change today. It's going to open up around $75. So yeah, it might change today for the better. But heading into the open, it's a little bit sketch. Doesn't really scream bullish just yet. You're under your 21. Histogram is bearish. Your 4-hour, 2-hour, 1-hour, 30-minute charts print the sell signal. But if you catch an open above 75, that all kind of cleans up a bit. So that is all I got for y'all this morning. Take one more look here at the futures. Nice. There we go. It's all kind of meaningless inside of the box, though. So we'll see, guys. Maybe, just maybe, CPI was a catalyst needed to get us out of the box here. But if y'all got any questions, any chart requests, anything you want to take a look at here ahead of the open, feel free to throw it on at me. Otherwise, I usually got today off, but I will be in the options room at 10:30 Central. No, take a look at Apple here. And frankly, I don't have too much to do with Apple. Let me reword that. I don't have too much to do for a swing trade in Apple. So when I look at an Amazon's kind of at the spot where I want to swing trade it. I'm trying to take home that paycheck on that push away from that 21. And then I think the further and the further and the further you get away from that daily 21 EMA, what you got to take into consideration is now there's this growing probability, despite how good things look up here, that we got to pull back to that 21. So the further away you get from that mean, I think the more you want to consider day trading it. Or eliminate that overnight risk of, hey, I bought Apple at 2.5 ATR on the daily chart. Now we're pulling back to a 21. And the thing that really sucks about that, you buy Apple up here and you're taking it on the chin all the way down to that 21 EMA. The thing that sucks about that is that pull back to the 21. That's where you're trying to get aggressive. Pull back to a 21, that's where you build a chunky position. So one thing I learned from my dad early on in my trading career, nothing sucks more than taking an exit or taking a big fat loss on the very pullback you want to buy into. So I think up here, you're trying to milk it for whatever it's got left. And the great news is, hey, if Apple just continues to push for another 1, 2, 3 weeks, you'll keep on making money on an intraday basis. But there's the easy part of the push and then the more difficult part of the push. To me, the easy part of that push always starts down here at that 21. It typically comes to an end once we're about 2 or 3 average true range moves above that 21. So Apple, I'm kind of thinking, all right, give me a 15-minute bull squeeze, give me a 5-minute bull squeeze. Give me something in my bullish playbook that I can come in here and work on the intraday basis. But we'll see where we open today. A little bit sloppy at the close yesterday. 15-minute sell signal, 5-minute sell signal. So maybe a little bit of cleanup here, as it looks like we're set to open a good $1.50 higher. And then turbo for NVIDIA. So what I would like to see here would be that fresh turn on the momentum histogram. Now, give NVIDIA credit. Momentum broke. And this kind of grinds higher, right? Pulls back, grinds higher, pulls back, grinds higher. So just based on the daily chart alone, there's a move that I might miss because my indicator's not registering it as bullish. Reason being, no momentum above the zero line. But just because my indicator's not flashing off, by no means does that mean we can't continue to push higher. But for that reason, it hasn't been too much on my radar. So let's take a look-see here. 4-hour chart looks good. Now you're going to open up another $4 to the upside. This thing's going to open up around 290. So for me, it's another name where, all right, I'm going to day trade it. If I don't have that textbook daily squeeze, daily buy signal, entry at that 21 EMA, remember, I got two trades. That's it. If I'm getting long in a squeeze, or I'm buying a dip to a 21 EMA. And I'm game to do that. Like I'm game to work that playbook on any time frame that prints my buy signal. So we're going to gap up here this morning, of course, but at yesterday's close, where's my ammunition? The 4-hour chart and the 2-hour chart. Well, I've got no 4-hour squeeze. I've got no pullback to a 4-hour 21. So I don't have a trade here. On that 2-hour chart, nice leg to the upside. You pull back to a 2-hour 21. That can be a potential trade. But I'd day trade it for now. I got to give it credit though; it's pretty strong. We've seen a handful of names get that negative cross and get really sloppy, really ugly. NVIDIA, despite it, continues to be pretty strong here. TPS, did Walmart report? Walmart does look pretty solid, though. I mean, here's another one. And mind you, guys, does not mean the trade works. But you get a daily bull squeeze right on top of that 21 EMA. In your 2 hour, the 1 hour, 30, 15 minute, everything inside that daily squeeze is bullish. It's my favorite trade in the world. And then to boot, it's also firing off a weekly squeeze here. Yeah, Amazon's one of the cleaner names off the scans last few days. Walmart, rather. Where are we going to open? 153.70-ish? Yeah, kind of right back towards resistance here. Which might mean for a guy like me, the Walmart ship is sailed. As far as a good entry. The morning where you're gapping up to the breakout point, I think ideally you're trying to wake up to some profits. Versus waking up and saying, hey, now I'm going to try to get long. I do like it, though. I do like it. But all right, folks, I will let you go here. Cash market will open in 22 minutes. And for those of you in the options room, I think Chris is already on the mic. So Chris will take you through the open. You got Johnny Carter after Chris, and then I'll be on the mic after John. A tough act to follow indeed. But all right, folks, thank you for your time today. For those of you in the mastery, we'll keep on sticking to the game plan here. Looking for Amazon up towards that 110. But for the rest of you, hope you have a great day. Stick to your game plan, and we'll talk soon. Adios, guys.